Hello, everyone. It is Sunday, March 17th, and this is a slightly different video than what I normally do. So, I was unable to post a video on Friday, had a very busy day with work, didn't get a lot of sleep last night. I was absolutely toast and just didn't get a chance to do my usual Friday pick. So, no pick for Friday, but we are going to go over the picks that I gave on Thursday and we'll take a look on how they did on a day trading basis. I'm not going to give a pick for today because this is a weekend video and I like to do it in the day. But instead, I did think it would be helpful if I went through some of the trades that I took this week, just a few, as I review and refine some new strategies. So, for a little bit of background, I recently completed my one share trading for a 75% win rate and a 2.0 profit factor for 3 months in a row. November, or half of November, then December, January, and February. So really three and a half months. I did my one share trading, and now that I've completed that, I'm looking to do two main things. The first is to slowly scale up my size and grow my account. The second thing is to continue to learn and refine new strategies. Can't talk. There's a lot of things that I could learn and a lot of things that I could improve on, but my ideal approach is to not take on too much at once. So I'm learning three things right now that are new to what I've currently done. So to level set on what I've currently done is I've had a lot of success in those past 3 months with short-term swings and put credit spreads, namely. So short-term swings last anywhere from overnight to 2, 3, 4 days typically, and they produce very quick. So I was usually targeting about a 1 ATR move on these types of swings, and I would try to take profits. So I think an excellent example of a trade that I would have taken would probably be something like MSTR on the 13th. So you can see here, I mean, market didn't make a new high of the day, which is what I like to see on these swings, but it broke through this little compression on this high plus trend line. I would have set an alert to enter on an LRSI pullback. So I would have entered somewhere around here, let's say 187.50, and I would have set an ATR target of about maybe 450 on that trade. So probably would have taken targets maybe the next day, but definitely the day after. I would have taken those targets and, would have made some nice profits. So that's kind of how the normal pattern would play out. That would be my picks. And those have done pretty well. But if I want to be a profitable trader, and I think I mentioned this in some recent videos, if I want to be a profitable trader, I have to have a few different strategies in my tool belt. The main thing I feel like is to have both swing trading and day trading. If you are in a bullish market, you want to have swing trading, and that can be a mix of longer term and shorter term swings. If you're in a bullish market or maybe a more sideways market, you do want to have day trading on your side. Or sorry, not a bullish market, a bearish market, or a more neutral market. A bearish market, you have a lot of volatility, a lot of heavy news, and then very strong snapback rallies. So it's a lot more difficult to swing trade, at least for any meaningful duration, like more than a week, I'd say. You could still do short-term swings, and day trading is a lot more profitable because you can take advantage of the volatility intraday, and you can reduce overnight risk if the environment is very uncertain, like in high volatile chop conditions. Ooh, I don't know my nose there. I'm a little sick. So I need to get better at my day trades and better at my short-term swings and also get better at my longer-term swings. So I'm practicing a couple of those, and I'm going to bring one example into play here. So an example would be something like Wells Fargo. So I took Wells Fargo on the 12th. I liked what the market was doing at the time. I liked the Wells Fargo had an excellent D1 chart, and I would have taken probably taken a 1 ATR move, which is $1, right? That's kind of my typical trade range. But I want to try to practice sticking with these longer term positions. So my plan is to actually, I took a deep in the money call here, expiring after earnings. When the market finds support and the stock is still looking good, I'm going to add to the trade once it breaks out, kind of at this level here. Going to add to this trade, and that's where I would normally enter and slowly try to build up that position into earnings. So I'm practicing that sort of longer term swing. The second type of longer term swing that I'm practicing are taking these very parabolic stocks. So I took MSTR over here on the 11th. And you can see it's already made a pretty big move up, but I think the ideal entry point, obviously here would have been a very nice ideal entry point as it confirmed the break above. This pullback here was really nice, and I think entering over here at 1425 would also be a great entry point, and just really trying to ride this move up until I see a bearish engulf. So I entered here. I accidentally took profits here because I meant to actually add to the business, and I took profits, but I got back in at 1729, and you can see how the stock has it tested the ATR. It's actually been holding up very well relative to the market, and it's still poised to go higher. It's very tied to crypto, so that is a huge driving force in this. And I'm just waiting to see that bearish engulf, right? Maybe something like here, you have a post earnings candle. I mean, that's really what I'd want to see in this kind of trade. Really just try to stick it out because it's gone absolutely parabolic. And I'm okay with taking a loss on this, right? That's going to happen on some of them. My entry isn't amazing, but it's decent now. Provided the market finds support, I think we can surge higher on this. So that's another one that I'm kind of practicing on. On the day trading side, I'm practicing kind of entering trades and trying to add to winning positions. So I think Riven is a nice example of me trying to do that. And here, we'll walk through one of the trades that I took. So here's a Riven on the 14th. I think it's a decent It's definitely a bearish D1 chart, but it's not the most bearish out of a scale from, I like to go from -3 to 3 in terms of my bias. So -3 is the max bearish, 3 is the max bullish. I would say this is maybe a 2. I liked this bear flag here. I didn't like this higher high, but I did like this rejection into the gap. It broke through A VWAP Q, and it was going to probably test some of this level over here. So I liked what I saw in Riven, and this was the price action that I got in early on the day. I got it right around 1090, and I knew I had some space to this low, kind of around 1070, 1065. So, I had maybe 20, 25 cents of room, which is pretty decent on a stock like this. And it was a pretty tricky day to trade on that day on Thursday because there was a lot of volatility, a lot of heavy volume, but a lot of back and forth movement with the PPI numbers. But at a bearish bias in the market, which was right, I ended up taking the trade here, but I bailed out for a tiny win or a scratch over here because I thought it was gaining relative strength. It was a mistake. So we're going to get into this day trading idea. The goal is to take a starter position and then consistently evaluate the market criteria and see where you can add into trades and really ride winners. Because these patterns are fractal, you can think of them as almost like mini D1 charts in a way, where the stock is has a strong trend, and you want to buy these, very, very tight orderly trends on a M5 basis, just like how you want to buy very tight orderly trends on a D1 basis. So I entered here, had a green solo. It didn't really continue, but it also couldn't really get down right away, which I didn't love. But it did end up cracking through. This was the price action you wanted to see. So you can see this is where I entered, this is where I exited. So I did give it, I think, some time, but I don't know. This is something I'm still pondering, how long I should wait these compressions here. I did like it was glued to the low of the day, but it wasn't quite rallying with the market, especially over here at this, this long candle that was coming up around 1220. Wasn't really digging that, but it broke the low of the day. It had followed through selling, and then it had another sort of mini pullback to the 8 EMA. We're just riding it down, long compression, and then we crack down again. So to me, the ideal entry would be you get this bullish H reversal over here, pull back, have this LRSI cross at 1150. Not the best price action, but once it starts to take out this low of the day, you can add to the position. Pulls back again, and then you probably have another chance to add on a flat bottom HA potentially at maybe one. Could add to a flat bottom HA, but I would definitely be taking profits here at 115. Given that we didn't expect the market to have any follow through selling on a day like this. And on the 120 candle, you see the bullish engulf. It's gaining relative strength. This is where you'd want to get out of the trade. But since my target was that D1 resistance anyways, or D1 support anyways, I would have probably sold at least some of that into strength. And then on the bullish engulf, we would have gotten the other half out. So just trying to plan these scaling in and adds on these day trades, depending on reading in the market. It's pretty difficult, and I'm really not great at it yet, but I am trying to get better. The tricky thing is it's causing me to trade a lot more than I like. I usually like to trade maybe 1 or 2 stocks a day, like max, right? Trying to find these really, really good picks. But with day trading, can be some more opportunities, and I'm trying to find the right balance of picking the right M5 stocks, picking good D1 stocks, and making sure I don't really compromise, or trying to get in the right one. So I'm going to bring up MPC again because I day traded this and actually took the loss here on the 13th, and I'll show you why I took the loss. But if we go back to the 13th, we got to start with just our market D1 bias and our market M5 bias here. Oh, that's the 12th. So on a D1 basis on the 13th, you can see here the market had held the prior day gains, or the prior day was inching up. We're close to that all-time high, and we just had the move after the pullback. So I thought, hey, you know what? This is looking, pretty good. MPC. So on our maybe short-term bullish market bias, I would say I'm a 2 bullish, and on a M5 basis, if we look at the first hour price action, we got this nice little double bottom over here forming, and I think I get in actually around 10:25, 10:30. So I get in kind of at this high of the day immediately, and I put in a start position. And it's very strong at the high of the day, right? You can see how this stock went a lot higher while the market was going lower. It had heavy volume, technical breakout. Price action I thought was very decent. It was energy, so it was a little bit, I know energy can be a little bit choppy, but this was looking very, very nice. Market had another test of support. I was like, okay, that's fine. That confirmed the double bottom. I like the strength, and you can see here how MPC tested VWAP, which I thought was fine. I wasn't super worried about that, but I didn't really want to get it much lower below VWAP. And what happened was I set my alert, and here's where I took the exit, pretty much at the worst time of the day, as you'll see. Closed below VWAP, stitching forward, and it was losing relative strength at 1210. And if I look at what the market did at 1210, the market was going absolutely flat. So it was pulling back, but I didn't really like how it was pulling back. And at this point, I thought, hey, this stock is pretty much lost, in my opinion. I'm going to get out while I still have the chance. So that ended up being wrong. The wrong decision as a day trade. In this case, you'll see here how we got this LRSI cross that broke through this downward sloping trend line. We get an HA reversal right here as well. And this was essentially a bit of a fake out. As soon as we dip below this level here, buyers rushed in and they started scooping up this stock at this price. They really couldn't get enough of it. Our market bias was pretty neutral at this point. I'd say 1 bullish, maybe even 0. But our stock bias, our D1 bias was still a 3 bullish. But when I saw this, my M5 bias was like a 1 bullish. Like I had no confidence in this trade, and that's why I took the loss. Which I can see and obviously it seems like, oh yeah, you should have stuck with it in hindsight. But in real time, it's a lot tougher to make this kind of call. And I think this is a stock where I'm better off getting in on this HA reversal here because I'm not so far away, and really using my pullbacks in conjunction with um, what I'm reading. Because I think the tricky part is if I'm scaling in these positions, I often see Peter Dave add at these high of the day entries, which I'm not super comfortable with, and it just hasn't been producing like how I would want it to produce. So I do need to wait for these pullbacks in the trend. Um, this was a deeper pullback than I would have liked, but I think once you see over here, the stock is starting to gain relative strength and an inch higher. I think this is a nice breakout that we can scoop in on. It's gaining relative strength while the market is going up, but not as much. And ends up being a pretty nice trade. There's a little bearish engulf, another move higher, and then another bearish hammer over here. And when this candle starts to give away, I will start taking profits on the trade because we know that the trend strength is waning for the day. A lot of heavy volume in those last two bars. So if I look at MPC, I took the trade here, but I think the real mistake was really getting in on the pullback and making sure the stock had held some support before I inched up higher, especially on a day like this when the market's doing nothing. Stocks start out strong and then it had a big reversal. So a good entry would have kind of saved me on the trade. So what I'm noticing with my day trades is that putting on a starter position doesn't mean I don't take a good entry. What I realized is that I should still do my same thing on a day trade, but put on a starter position where I would normally enter a full position and then add to the trade as it continues to confirm in my favor. So it confirms, I do an early add, confirms, and I know the price action that I'd want to see for this stock to get out, right? So once I'm over here, then I'm probably going to be out of the trade as it's giving up some of these gains. But what I would do in hindsight, and it's important, right? I get this break of the trend line. This is nice. I get my flat bottom HEs over here. So we enter at 1245. We like what we see. Goes up higher. Stock is gaining relative strength. And we can see any sort of like market pullback over here, right? Where market's starting to not be very strong, but stock continues to remain a strength. So I would get in here, add, and then when the market's starting to go sideways here, we got this 1OP bearish cross coming in right around 210, maybe 215. Right, we're always looking to see what the market's doing. So 210, 215, 1OP bearish cross. Take your gains, right? Or even take partial out, right? So half in, another half in here, maybe another half in here as if confirms, right? You're riding it up. So you see this half out, okay, and then the extra half out over here. So that's how I would trade it in hindsight. And that's a trade that a bad entry, a good entry would have turned a loser into a winner, and I would have made money. Let's look at the picks that I gave in the previous video because that's another example of the day trading aspect of it here, and I was reviewing it today. So we looked at ENPH and why it was a really nice short. Later in the day, I had a decent win on a CDS. It took about 15%. But very obviously tough day to trade. There's a lot of volatility happening on the 14th and a lot of volume. But let's go over our short-term market bias. At this point on the 14th, we had some longward candles, not easily reversed. So short-term was maybe like a 1 bullish at this point. And on the M5, I would say I was a 1 bearish. We had these long candles, but we weren't really moving in either way, so I didn't have a very strong conviction in the market. I thought ENPH was a nice, really, really nice trade. I would say it's a 3 bearish in terms of a D1 trend. No move over here. It has choppy moves, and to the middle of the range when it breaks through technical support, it can really gain volume. You can see lots of volume as it's selling off over here. broke through the 50 SMA, had room to the 100 SMA in the gap. So really, really nice D1 setup. The M5 chart, gap down, did not bounce when the market bounced, right? That's what I was looking. That was a we looked for over here. In this half an hour while the market was bouncing, this stock was getting pounded. So we had a green solo here that got engulfed. That's fine. So I took the trade around here, 112.40. Took the CDS for the 113, 110 CDS for 120 debit. Stock then started to go a little bit sideways. It poked down here, and I didn't like this tall bounce. So I was like, this solo's fine. We smacked it down quickly. We got this tall bounce. Got another green solo. We got another green bar here testing this high, and then sellers came in, and I took profit around this 115 candle as it touched the low of the day. And my bias was that because the market had just made a new low of the day, and this stock had not done anything, or had not made a new low of the day, right? It had a pretty strong rally up. I wasn't as bullish as I was before. The tricky thing with day trades is like you have to see if it's going to lose its footing or not. In this case, ENPH lost its footing a little bit, was gaining relative strength and moving sideways while the market was moving down at 115. But it continued onwards all the way until 130. It had pretty nice gains over here. All right, this is the stock at 130, and this is the market at 130. We had this bullish pivot over here. So pretty difficult conditions to trade in, but I was happy I was able to take some profits on a trade like this. As what I would probably do is, I think this move is it's important, right? Because in some cases, the stock doesn't actually make it back to the low of the day, and we have to try to take the profits at the double bottom. In this case, this was the right price action for it to break through the low of the day, right? Because this confirmed the strong selling. We got rid of this move very, very quickly. So sellers were still in control of the stock, although the trend had waned a little bit since what we had seen previously. Now, what I would have done is taken profits at the low of the day. I think that's fine. Or even waited for this bullish engulf. Okay, that's also fine. Wait for it at 130. And then I set another alert, probably at the bottom of this bullish engulf, and just see what it does on the market, right? We see the market sort of rallying up, 1OP cross, LRSI cross. And lo and behold, the stock does not rally at all with the market. And then kind of around 220, it's starting to crack down. As soon as the market pauses for a second at 220, this stock starts to crack down. And so this alert would have been triggered. We would have probably gotten, here we go. Here's our HA reversal right here. So you could probably get in that HA reversal at 230. A little bit premature market-wise, in my opinion, because we've had a lot of volatility. There's a bullish hammer here, so I wouldn't feel as confident in this case. I would have liked to see this action here at 250. So getting to 250, I know that support is about $1 below me, so I target the SMA for support. It has proven that it has continued its weakness while the market was doing nothing. Now that we got this double top, lower high, made a new relative low on the M5 chart, and we had some strong selling pressure over here. You could take maybe a quick win on a long. Market turned out to have a pretty nice move. The stock tested it pretty quickly, and you would have taken profits over here. So you could have exited the position out and re-got in. If you felt still very confident with conviction, you could just hold it through all of this, and you would have taken this gain right here, maybe about another 50 cents of extra profit. Depends on your style, but my previous style would be enter on an LRSI pullback and have a fixed target. So in this case, at 115, I would have entered at 115. Stock would have maintained relative strength, and I would have taken profits here. So I would have taken profits in this chunk of the trade. This pullback is okay. So what I'm noticing is that poor entries cause a lack of confidence for me, and I knew that for a while. So, um, the key learning here, and it's important to see the themes and the patterns in the trades that you make, is that just because I have a starter position doesn't mean I can compromise my entry. Great entry on a starter position is going to be the ideal candidate, and then you look to add on any sort of additional movement, right? HA reversal, maybe a compression break. Those are the things that you look for in terms of adding and also seeing what the market is doing for you to add to that position. So ENPH, nice winner. Let's look at Google. So Google, I had actually a really great entry here, and I took a CDS on this and ended up taking a loss because my market read was completely wrong. But got in at 150. Google soared up higher, and what I should have done is taken profits at 250. Why? Because I didn't have my market bias for the bullish side at this point should have been pretty weak. It should have been a 1 bullish, right? This is not, I mean, given the strong price action, this is a pretty weak bullish move, and I got to bail at the first sign of trouble unless we get that support. 250 is the sign of trouble, and I missed that. So it needed to withstand this move, and it did. So given that the background was very mild, I didn't have the latitude to be patient on this trade. I had to be more nimble for a day trade. So I had to take profits on any sort of engulf or hammer that I saw here because the market was going to be too weak. And we had a pretty decent sell off over here. And I still could have taken a profit at the end of the day on Google on my CDS, but I didn't. Because I was still feeling okay on the market, and then I had to take the loss early in the morning as Google lost its relative strength and closed below the 50 SMA on my CDS. So for me personally, I took the L on Google, but there was a chance to make money in the day. So if I were to look back on this trade, it's tough to say whether I should categorize it as a W or an L, but I think for the purposes of day trading, if you got a nice entry here, this should have been a W. If you're an idiot like me, then it should have been an L. So those I'm going to categorize those twos as W's in the book. We'll take a quick look at our other positions over here. So Wells Fargo, long-term swing. Again, we're not too worried about that. Netflix, also longer-term swing, but I'm not crazy about this bearish engulf. What I did like, though, on Netflix, it was making new highs while the market was going down. So there is some, what's it called? There is some relative strength coming into the stock here, but it's been pretty flat, as the market has been pretty flat. So we're still being pretty patient with this, but I'm not going to get too overzealous. This has certainly tempered my bullishness, and I need to see a pretty strong reaction or a strong sign of relative strength if the market pulls back here. Because Netflix hasn't done a whole lot since this breakout, which is not something I am liking. So ASML, it broke through our line here today, so we are taking the loss on this stock. Happens. So day trade, you could have taken a scratch here, and we had a half position on, so it is a half loss. But this bearish engulf was the key over here, and it did not hold this level of support like we wanted to, and it broke through. So ASML, we're taking out. TMUS, our put credit spread, was doing very nice literally until the 14th and the 15th. 15th, it tried as hard as it might, but got rejected off this line and could not really get above 62.50. And we closed it for a loss, or I closed it for a loss. Not a huge loss, but I did close it for a small loss. So TMUS was a loss. We can remove ENPH in Google. Let's look at LIN. And LIN is doing okay. It's holding up very well relative to the market. Massive volume on March 15th. What's going on over here? Well, selling pressure and just a ton of volume coming into the stock really in the last hour of trading, or last really 15, 20 minutes of trading. So that seems to be responsible for the massive volume spike over here. Very crazy. But we're not worried about these longer swings. MS expires this week, and so far it's holding up. We have this 180 level that we're leaning on. The 8 EMA is coming into play. This horizontal resistance and support is coming into play. You can see how the stock has been reacting around this level and bouncing off this level quite a bit. So if it can hold the strength during a market dip, I think our put credit spread is in good shape. So tomorrow I'm going to try to have a video out, get it back on schedule. We'll go over our market biases and we will get back into it with the picks. So hope you guys found some of this video helpful. Make sure you go over your trades, especially new trades, every week so you can see what you're doing wrong and what you can improve. And we will take it from the next video. Thanks everyone for listening.